What's going on, everyone? Welcome back to another video. Today I'm going to be showing you the absolute best moving average strategy that nobody's using. So let's get started. So before I show you this strategy, please understand that everything in this video is simply me just showing you how I choose to spend and invest my own money for educational purposes. And if you choose to follow along or do what I show in this video, make sure you consult with somebody in that respected field before you do so. So the first thing that we need for this strategy is a standard moving average. So if we come up to here on trading view where it says indicators, go ahead and click that and we'll just type in moving average. So right here, this moving average is what we need. We'll go ahead and add that. And then the next thing that we will need is an exponential moving average. So moving average exponential, go ahead and add that to your chart. Now, at first glance, you're probably like, this does not look like it's going to help me at all. And that's because it isn't, because we have to set up the settings for both of these. So for the standard moving average, we want the length set to 8, the source set to close, and the offset you can leave it as it is. And I choose to leave mine as blue, but you can change this to whatever color you want and leave all of the other settings how they are. And now on the exponential moving average, we'll want to do something very similar. We'll change the length to 10 and we'll change the source to MA, which is the MA that we just adjusted the settings to before this. Then we'll go to style, and I choose to set mine to red, but you can change this to whatever color you want, and we'll leave all of the other settings exactly how they are. And if you want, you can change the thickness or anything else about these MAs, but I just leave everything else how it is. So now that we have that set up, we can start moving into how to use these MAs, as well as the strategy behind them and kind of some tips and tricks and guidelines to follow while you're using them. If you stick around to the end of the video, I'll also give you an added bonus that makes this strategy even stronger and will help you prevent taking trades in ranging markets. So we're on Euro USD on the 4-hour. Now, the first tip that I can give you with these MAs is that I have found personally that it works a lot better on higher time frames. You can use it on, the 1, the 5, 15, 30, and the 1 hour, but I find that I have much more consistent results using it on the 4-hour and daily. But that doesn't mean that you can't use them on any time frame. Go ahead and test it out for yourself and see what works best for you. I've also noticed that it works best on pairs that typically trend more often than not. Some pairs like to range and spike very high and low very often. These MAs will not help you on pairs like that because these MAs require the market to be trending to be able to give you those entries that you're looking for. So now that we have that out of the way, let's start looking into how to use these MAs. The first thing that we're looking for is a cross between the red and the blue MA. It doesn't matter if one crosses above or below the other. That just typically depends on if the market is trending up or down. What we want is a cross, which we have one right here. Once we identify that cross, all we have to do is wait for the market to do one thing, and that is simply move sideways into our MAs without breaking above them. So you can see right here, let me find my little arrow. We can see right here that we did have the cross, and then we see that price starts moving sideways into our MAs without breaking it. So once you get to this doji candle right here, any of these candles would have been a great entry. And then you can simply hold that trade until you see the MAs cross again, which we have all the way down here. Now you can also enter more trades if the market continues to trend. So for instance, we have this trade right here. We also have a trade opportunity right here, and you have another trade opportunity right here, as well as right here, and as well as right here. Now you're probably asking yourself, why would we take this trade right here? Because it clearly broke above the MAs. And sometimes you will see price go above the MAs. But if we pay attention, you will see that the MAs never crossed. So we can still safely take our trade or stay in the trade that we are currently in, because when the MAs cross, that is our exit point for the trade, unless you want to mark up a support or resistance area and get out that way. But these MAs come with a entry point and an exit point if you choose to use it that way. So let's just go ahead and look at these trades a little bit closer. We already identified this one. Price moved sideways. We could see that price was inside the MA for a couple of candles and then dropped. So you could have entered off of this doji if you wanted to. You could have waited until this candle closed, and then you could have taken your trade. And the same thing just applies with all of these right here. We can see that price starts moving sideways into the MAs, doesn't break. We can see all of these candles are within our MAs and they all basically close below it. So all of these right here are also great entries. And then we have this one right here where it does kind of break above the MAs, but you can see that the MAs never crossed. So even if you decided to wait to see what price would do, if it would continue above the MAs or not. You could still get an entry somewhere over here where price starts once again moving sideways into our MAs without breaking it. So let's say you missed this trade. Now you can grab this doji right here for a trade, and we have the same exact thing right here. Price moves up and then starts moving sideways into our MAs. So you could have got a trade right here, or simply after this candle closed right here, and then you would just wait for the MAs to cross, which would be this candle right here. So let's go ahead and just calculate some of the numbers on these trades to see how many pips you would have caught using this very simple strategy with my MAs. So if we would have gotten in somewhere over here, you would have made roughly 198 pips. If you would have gotten in somewhere over here, it would have been 136, 129, 88, or 22. Now, nothing is also stopping you from stacking all of these trades. You could have taken every single one, or you could have taken every other one. It's really up to you to choose how to adapt this trade strategy to your style of trading. Personally, I like to just stack the trade. If I see a good one coming and the market is still trending because my MAs say that the market's still going down, you can go ahead and keep stacking your trades, so you can add all of those numbers I just showed you up, and that would have been roughly how much you would have made. So now let's move on and talk about the stop losses, because it doesn't really matter if you enter a trade if you don't have a stop loss, because if the trade goes wrong, you could really lose a lot of money if you do not have the correct stop loss. So the first way that I would tell you to place your stop loss is above the highest point of when price moves sideways. That is your first option. So you could have placed your stop loss up here. You can see how price never came close. Over here, man, get that out of the way. We can see how price, the highest point is right here, and how price never returned back to that area. And over here, the same thing. If you chose to get in and place a stop loss right here, you would have been fine. Or what you can do is a standard 25 or 30 pip stop loss, or maybe if you want to, you can place it at the next high or low, depending which way the market is trending. That's completely up to you. Those are just some guidelines for some stop losses for you to be able to use. And you can also trail your stop losses on your trade. So if you enter this trade and it starts to go into profit, you can move your stop loss here. And then once you have another trade or level start coming in that you want to take, you can move the stop loss from your previous trade further into profit. That way, if price comes back up, you know, it might stop you out, but you've secured that profit and you won't lose any money. You can keep trailing your stop losses on all of your trades farther and farther down, however you want to do it. So even if price does come back up to here, if you were trailing your stop loss, which you can do automatically as well, you might have been able to get out right here, which would have saved you roughly, let's see, why is this not working? There we go. Would have saved you roughly 45 pips. So again, another option that you can do with your stop losses is trail them. You can use support and resistance to get out, or to set your stop losses, things of that nature. Really what this strategy is great at doing is giving you a starting point to design something that works for you. So again, let's just recap how to use these. We simply wait for the cross. We wait for price to start moving sideways into the MAs without breaking them. And then once you see that price cannot break those MAs again, you just look for your entry and simply take it on whatever candle looks the best to you. So for me personally, it would have been this doji here, or the close of this candle right here, and so on and so forth for every trade that you see. And you can either exit with a trailing stop loss, maybe support and resistance from previous structure, or you can simply just wait for the MAs to cross again, and then you can get out. And this works in uptrends as well as downtrends. You can see how the MAs crossed right here. We have price start moving sideways into here, so you could have gotten in anywhere over here, or even if you wanted to wait for this candle to close right here and then get in, and then the MAs cross right here. So from here to here is still a profitable trade. So if you made it this far in the video, you've stuck around because you want that little secret sauce, that extra tip that's gonna make this strategy even stronger. And that's simply by adding one more MA. So let's go to the indicators up here, type in MA once again, add the extra moving average. And now that we're in the settings, let's go ahead and change the length to 50. And I like to make mine black, but again, you can change this to whatever color you want. So now if you look at the market, if you see that the MAs are moving sideways like this, or if the black MA or whatever color you set it to is not going along with these original MAs that we have, then just stay away from this trade or that pair until you see that everything is going the same way. You can see how these MAs are moving up, and so is our 50 moving average, so you can go ahead and look for trades. Same with right here, you can see that it's moving down, so we have these trades here. you can see that over here it's moving up, so we can take this trade. And if we look over here, we can see that as this one is moving down, so are our other MAs, so we can start taking trades. But if you see that the MAs are going against each other or are not doing the same thing, just stay away from that pair. So for instance, you can see that this MA is going up as well as this one, but our black 50 MA is just moving sideways. So it's a good rule of thumb to just stay away from this trade. So that's the added bonus to this strategy. And you don't even always have to keep it on your chart. You know, when you first just come onto the pair, if you think something looking a little weird and you just want to double check, go ahead and turn that on and see if everything's correlating. And if it is, you can just turn it off and either stay away from it or look for your trades. So that's the added bonus. I hope this helps. So once again, super easy MA strategy that I have created and I used a lot in my first year or two of trading that netted me some really big trades, especially on USD CAD, that I just wanted to give you guys for free because, like I said, I wish stuff like this was available when I first started trading. It would have made everything a lot easier. And who knows, maybe you want to keep using this and master it for your entire trading career. Personally, I don't use this anymore because I can simply see what it's giving me. For instance, I can see that this is a retest of this area up here, so I would have taken a trade here anyways. But if you're new, this can really help you see where possible entries are in the market. I just don't use it anymore because I've been trading enough that I can just see it on my own. But if you have any questions, go ahead and drop a comment below and I'll be more than happy to help you out. And with that being said, I will catch y'all in the next video. Pew, pew.